Let's get started. My name is Adi. I'm a principal at 10T, 1RT. We're a growth equity fund in this space. Just do a couple introductions and then we'll kick it off. Start with you.
Great. My name is Angela Dalton, and I am the founder and CEO of Signum Growth, which invests and advises in video games and intersection of video games and emerging technologies. Also the founder of Dot Play, which is a games publisher, a mass market spaces with Polkadot as the infrastructure behind the scenes.
Hi, my name is Ryo Matsubara. I'm new founder and CEO of the Oasys gaming blockchain. So Oasys is a gaming blockchain backed by the traditional gaming space, especially from Japan, like Sega, Square Enix, those guys. Looking forward to this discussion.
Hey everyone, I'm Carlos. I'm a general partner at Bitkraft. We are a $1 billion AUM investment manager focused on games and interactive entertainment. About a third of that is dedicated to the intersection of Web3 and entertainment, and I run that strategy for us.
Awesome. Thanks, guys. So let's kick it off, get right to it. Gaming has been completely overshadowed by a bunch of other sectors in the digital asset ecosystem, let's call it. Why do you guys think that is, and what are some catalysts that you are excited to see in 2025? Let's start with you, Angela.
Sure. So I think in blockchain gaming, we've seen a lot of kind of shifting around of capital, but not a lot of new capital. Gaming has really been off the radar screen. One of the major reasons for that is a lot of blockchain gaming falls, in my view, under the heading of unsustainable. Kind of short-lived games where there's what we call a token flip and kind of move on to the next space. I'm very biased in this because my background is traditional gaming. And I think that we will move into more sustainable spaces. And then the other reason, I think, is because of meme coins. Meme coins are getting so much airtime. And I think the thing that could change that is, Trump, Melania, then President Milei, then I even use the word Kanye. I mean, this volume will be, I think, its own demise. And I think that people will look to other spaces. And a lot's been happening in gaming.
Okay, this year, 2025, so we should take the token-centric gaming approach because, since till last year, gaming project took like Web 2.5 approach. Try to bring the user from Web 2 work, but we always have Web 2 space is more competitive than Web 3. It's really, hard to acquire the user. Even though our partner is a gaming giant like a Ubisoft and, the lot of the game, the famous game company, that was really hard to acquire onboard the user, transition of the users by free. So, but looking at the, Web 3 space, last year, there's a bunch of the meme coin boom, a lot of the airdrop boom. The poker was, always in the center. So actually the meme coin, the Palm.Fun things like, showed us Web3 is token, actually. So we should, take our token-centric, approach to the game also, in this year. I think if we take that, maybe gaming's narratives come back to the mainstream. Yep.
I think we remain game-centric gaming investors. We take the opposite side of wanting things to be too token-centric. It's important to reflect on how much work there has been on the abstraction layer over the last few years. And so, when we last had a bull market, you needed to buy an NFT. You had to get a wallet, fund a wallet, buy an NFT, uses NFTs in the game. There's like a bunch of barriers. And then once you get there, the games weren't particularly sticky to begin with. We have now had significant advances in the performance of blockchains and the abstraction layers that allows those experiences to be progressively more and more like games. I think an interesting parallel to draw, and look, we don't know if the token is going to work or not, but there's a lot of conversation recently around Hyperliquid. And I think when people talk about Hyperliquid and the performance of Hyperliquid, it's this idea that in good days, Hyperliquid makes money and buys back their token. In bad days, Hyperliquid makes money and buys back their token. games have historically been one of the most defensive asset classes that you could invest in. If you look at public stock performance for gaming companies, it tends to be rather defensive. Because once you start playing a game, you just kind of keep playing the game. If it's a bad market, good market, I mean, you're going to cut large discretionary spend, your vacation to the Caribbean or whatever it is. The small expenses you make on games are probably the last thing that you'll cut. And so for us, when we think about the opportunity for games, it's this idea of having an organic, sticky product that will generate crypto flows because the crypto is on the back end and abstracted away. But when the bear market comes or when you have bad days or volatility, the majority of those users don't care because they're not there for the crypto. They're not there for the token. They're just there to play the game. And that generates flows, generates volumes, which feeds the narrative of having a product that is truly defensive and in some ways decorrelated from crypto. If you can't decorrelate from short-term capital cycles, then you can't build a long-term sustainable business. And the more that we become token obsessed in games, the more that we become short cycle correlated in games. And so that's what we focus on moving away from.
I think that's a great point. Let's talk about that a little, Carlos. I think good games take a really long time to build, right? And in the traditional world, traditional gaming world, we see that a lot. But in crypto, users want results fast. Investors want results fast. So how do you balance building a good game for the long term while still having metrics and KPIs to show for it in the short term?
I think the bigger issue here is actually how you balance the fundraising cycle. In that, if we look across our portfolio, some of the most seasoned game developers that we've backed, they're now sort of known by the market because they've raised money, but there's no consumer footprint around, for example, John Smedley, the creator of EverQuest, or Nikita Buyanov, the creator of Tarkov. Those are two of the most consequential game developers of the last 20 years that are now building in crypto. But both of those are waiting until they have a playable to announce the game to consumers because they know that if they just announce they're building a crypto game before having a game ready, that their audiences, their traditional audiences, are going to rain fire on them. You look at Eve Frontier, which we backed 3 years ago, and only, I think, 6 months ago or less did they actually come out and say, hey, we're building Eve Frontier. There were rumors that Eve was building something, but it wasn't called Eve Frontier until relatively recently, until they could have an open alpha that people could go and they could play the game. The trick is more so how you balance the fact that we're financing these businesses in 2-year increments and the game will take 4 years, 5 years, whatever it is. And so it's like you need Series A investors that are willing to invest pre-metrics. And usually that capital flushes when there's like less money in the market, basically because people want things that are tried and true or metrics driven or whatever it is. So the way that we balance it is we know how long it takes. We have a fund that reserves significant amount for follow-on capital. We plan on supporting our teams for multiple years when we make the commitment, and we fully support them remaining in stealth until the product is ready to come out. We're in absolutely no rush to monetize audiences. I think the idea of selling NFTs or selling tokens, a lot of people think that this is an asset. I will sell an NFT and I'll get a few $1 million and I have these NFT assets. NFTs, until proven otherwise, on a company by company basis, they're not assets. They're liabilities. They are debt that you take against the trust of your community on you shipping a product. And what we have in crypto is a bunch of like over-levered companies with ship product that can sustain the leverage that they put on by monetizing their audiences too early. And so when our teams say, hey, we're going to launch a game in 3 years, we're thinking of launching an NFT collection in year 1, we will be vehemently against that, and we won't allow audiences to be monetized until the game is ready to monetize that audience. So yeah, my balance is I just don't care about it. I skip that whole thing. I try to not finance teams that want to monetize too early.
Do you have any thoughts, Angela?
Yeah, I'd love to give our perspective. So set aside crypto. There's huge disruption happening in gaming right now in terms of the cost of entry because of platforms, UGC platforms like Roblox and Fortnite's UEFN. And we're spending a lot of time there because it is, instead of 3 to 5 years to create a game and a few $100 million, you can create a game in 8 weeks, 10 weeks, and for $50,000 or, some range of small numbers, basically. And what's interesting to me about that, our mantra in investing is merge onto the highway of behavior that is already happening. So the behavior has already shifted there. Roblox is larger than all of AAA gaming combined. Matthew Ball came out with that. And that I kind of, after focusing on these UGC platforms for the last 5 years, I can tell you that I feel it. So it's getting cheaper and easier to create games in those spaces. And those independent developers have a similar ethos to crypto developers. They care about staying connected to their audience. They care about creating something outside the platform. They care about their own sovereignty. They care about extending the media beyond the game into TV, web series, toys, whatever. And so all of these things combined create a recipe for us for what will be the future of crypto. And that's where our games publisher is spending time and money.
Ryo, anything else to add?
I think we can take, the new approach. That I'm on the token-centric side because I'm seeing a lot of the game, traditional gaming guys, like, for example, our partner Sega, they're trying to be the IP company rather than the gaming company because competition and the gaming space too much competitive. So they're trying to be more like a Bandai like that they have Dragon Ball, a lot of streams. Then looking at the Japanese mobile gaming space, too much competitive out of a cycle of the new games and the successful games too short actually. Then everybody is in traditional gaming space in Japan are trying to escape from the battle of the too expensive, too high cost, high budget AAA game. So think we token things. Maybe we might be and able to create a new business model. That's the new challenge we're trying. Yeah.
I think I just add something to that.
Of course.
So like the fundamental issue to me when we look at a Web2 market where the cycle of success keeps getting shorter, which I agree with, right? Like at the very top, the games are super sticky, Roblox, COD, I don't know, whatever else, right? And then everything below top 10 is like an ever carousel. A successful token is premised on a successful economy. A successful economy is premised on the longevity of capital in that ecosystem. If you think that the game cycles are getting shorter and shorter and shorter, then that is diametrically opposite with the kind of long-standing economics that is necessary to back a token to begin with. Like there's no world where you can have games that churn every 2 months and tokens that we vest over 2 years. Right? Like that's like a fundamental disconnect. Now you can say we should build an ecosystem of games where you have one token across multiple games and you try to use that to cross-advertise and retain the users in your ecosystem so that they churn from game A to game B, but they have some incentive to churn within your platform. That's fine, right? I think that there's certainly a lot of token-centric, incentive-centric, reward-centric models to balance that and to bundle a bunch of short-lived games into an ecosystem that has persistence and a emerging property. But otherwise, at the single game level, if you're worried about cycles being shorter and shorter and shorter, then there's just like no way that you can slap a token on that type of game.
Let's talk about that some more. So I guess in 21, 22, we had play-to-earn tokenomic models. Now I feel like we're seeing like play-to-airdrop, which is pretty similar, right? And that's where a lot of these short-term games are seeing a lot of users come into their platform, but there's zero retention, literally zero retention with all of these games that have come out in the last year. How do you guys think about different tokenomic models? Obviously, the conglomerate of multiple games and one token is one model, but where are games moving to in 2025 and 2026 as it relates to tokenomics? We could start with you.
I mean, I just think it's another name for the same phenomenon, which is just this token flip phenomenon. And anything that is, to Carlos's point, short term is unsustainable to me. In games and entertainment, the goal is to focus on long-term sustainability and engagement. If you look at what game, really successful game companies, Epic Games, for example, pays their developers based on engagement, because that is the key metric in media. So all of these things I find to be just another kind of, speculation and trading wrapped in a graphics in a nicer graphics, model. So I think, for us, in our publisher, we're taking, I think, a little bit of a different approach, which is to tap into the power, the original kind of vision for Polkadot, which was interoperability. And we want to tap into that for a whole ecosystem of sustainable long-term games where maybe IP, brands, players, skins, avatars, things are interoperable. That doesn't mean, the old, we're going to take something from Call of Duty and put it in Fortnite. That's never going to happen. I think we all realize that now. But we can start to see a whole ecosystem of games develop and entertainment, because they're all blending now, where we will have interoperable digital assets. So that's what we're focusing with.
I think looking at Web 2 gaming space and the Web 3 token space are there's I think the key the common key point to be sustainable or more successful. It was looking at sustainable and successful the games like a Roblox, I don't know, Counter-Strike. So there's a bunch of the mod and the field. So the people making the field or the mods. So there's a lot of the mini field, mini games are there. So looking at the crypto space, the successful the tokenomics, the projects like Ethereum, like Solana, who is creating a lot of the token projects based on that. So the largest utility of the token is creating a new token actually. So largest utility of the successful game is to create the new games on that the platform. Think we need like more Ethereum or Solana like in the tokenomics, the issue more token or more games on that games. It's like a mini games like that. So yeah, that's my idea.
For as long as the internet has been a part of games, every time a great game has been connected to the internet, a black market has emerged around that game. Eve, EverQuest, World of Warcraft, pick a game. If it's great and it's connected to the internet, there's a black market. Single player game, Elden Ring. If it's great, they're connected to the internet, there's a black market. Up to now, black markets or peer-to-peer markets or player markets in games have been treated as bugs. And crypto gives us an opportunity to treat them as features. We think a lot about the idea of crypto genre fit. And for as much as we want to innovate with crypto, all of that innovation is based on tried and true things that have existed in games for a long time. Like, for example, going to the guy that made EverQuest and backing him to make his next game in crypto. Going to the guy that made Tarkov, which is a very active black market game, backing that guy to build in crypto. Going to people that built Eve, backing those people to build in crypto. Of course, we're not just going to do tried and true 30-year veterans, and every now and then we have to do something weird and crazy like we did Cambria, which has $160 million of volume in a RuneScape-inspired crypto-native game. But the majority of what we do is just trying to look at the world that has problems in terms of black markets and say, hey, let's go after this cohort and let's make those black markets white markets and let's treat them as features, which will have a totally different class of problems with it, because now you have an open economy and players can come in and they can leave, and there's no magic wand where you just put a token in Eve and all of a sudden it's easier, right? There's all sorts of risks that we're willing to incur on that innovation, but we're going to put innovation on top of patterns of play that are validated. And in games that have significantly robust economies, and we're going to skip all of the other stuff. Like the play to, like, why does play to airdrop exist? Play to airdrop exists as a response to exchanges wanting metrics, and the metrics that the exchanges want is social engagement. The exchanges set the tone of the metrics, and they have set this tone around the wrong metrics, and then you have a bunch of people going after the wrong metric of like Twitter growth. And then like it just like generates problems and problems and problems. Like it's a response to a deep flaw in the ecosystem of how those who control flows and capital choose to monetize those audience. Because at the end of the day, for the exchanges, like they care about top line growth because they care about, or not top line growth, they care about social growth because they want a lot of users, because they just want those users to come to their platform. It doesn't really matter if your token pumps and dumps, like literally it could matter less. They will use your game to acquire users for their platform, and long after your token has traded to zero, they'll have that user to trade on something else. If we optimize around the wrong incentives, if we're led by people who are actually conflicted as business partners to you, which is the nature of exchanges, then you're just going to get shit results on product. And you just kind of have to not do that and be patient and be willing to go the opposite way that the market wants you to go.
I was just going to add to that so Mythical Games, which has NFL Rivals, and this year is rolling out another 7 games. The COO actually came from World of Warcraft for 20 years, one of the original founding teams. So to your point of leaning into these existing kind of playbooks that we've had is super important. John Linden was at Call of Duty. Basically, they just said, okay, what do players really do in games? I have a screen. I have my items. You have your items. We trade those items. You have 5. I have 3. That's what players really do. And so they introduced that concept. They call it quick trades. And all of a sudden, 5 items have changed in the background. This is, crypto's working in the background. Nobody knows. On the front end to the players, it doesn't look any different from any other behavior that they have, kind of loved for decades. So I think that's really important too. I mean, that resulted in like a 20% boost to revenue growth, and it's definitely getting the traditional game companies' attention right now, because traditional gaming is trying to figure out what is this crypto thing, and so far the industry hasn't shown them anything. So, and I still think it's going to come from traditional gaming behavior and kind of what is already fun.
I think that's a really important point. And I guess my next question is really focused on, okay, in crypto, you've kind of been extracted away from the info layer. Wall abstraction, chain abstraction has been incredible, really, over just the last year. Mobile wallet users are at 36.4 million as of January. Why does crypto gaming need tokens? Why can't I just launch or use USDC for my microtransactions or payments between different users? Carlos?
It doesn't need tokens. You could have games that just use NFTs. You could have games that just use USDC. For us, it's a balance in that we're trying to run a successful crypto venture capital firm. And so we have to have some skew towards tokens, but we have backed a number of projects that have stuck much more to the NFT side of the innovation than the token side of the innovation. I think where you do have a game that could support a token, then it is in your best interest to use a token, because tokens are fantastic ways of aligning incentives. The token opens up marketing budget because you can use tokens to reward activity. Ideally, you're using it in the right way. So for example, there's a very big difference if I reward a user with $10 of tokens for downloading a game versus if I reward the user with $10 of a token for beating the first boss. Usually when you're in like a Web2 gaming company and you have your funnel, your retention funnel, one of the things you're always paying attention is like, what are your drop-off points? And maybe your drop-off point is your initial screen, and then you try to get people through that. But like, usually you will see some place in your retention curve that the drop-off gets a lot lower because the user has done something that like hooks them to that game. Beaten a boss, created a character, crafted armor, doesn't matter, right? If you reward that action, then you're rewarding the user to go through the journey up to the point where it becomes sticky. Versus if you reward them for downloading the game, then it's very bad, right? And so there are very interesting ways of using tokens as marketing budget in a way that's like ROAS positive, but you have to know where to spend that money, which is like where a lot of people don't do it because they're trying to incentivize the download or the Twitter follow because they're trying to optimize for the exchange listing, right? And so the majority of games don't need a token. The majority of products don't need a token. But if you have something that emerges into that sovereign digital nation, in that world where you have players and trading and multiple users in an economy, the same way that as a country it would have currency, as a game it can substantiate a token. But that's a small slice. Like that is like basically in Web2 games, we have the term of a forever game, right? Which is like that game that crosses over the 5 years plus, 7 years plus game that will exist for a long time. I believe only forever games need tokens, or an ecosystem of games that are not forever games. And that's like the bar. And if we don't think that the game is going to meet that bar, then we're not going to do the deal, or we're not going to rely on the token to monetize our investment.
Ryo, I know you spend a lot of time in tokens. What's your thoughts?
Yeah. I had 2 answers. If the game wants to do RMT and legally, we don't need token. I think USDC, USDT is enough, because we found that after the pure Web2 user come to Web3 games, and after they touch the in-game marketplace, ALPPU became 3 times because it's RMT. People collect their items, exchange the items. It's a new experience. So it became 3 times in ALPPU. But if the company wants to challenge the token things, they need tokens. Start from token. That's new approach. But if you do that, they don't need to stick to the video game. Think game is okay. The baseball is also the game. Also the betting, also the casino is also game. Think in Japan we have pachinko. It's a casual. It's like a casual gambling, and also actually and historically in Japan also the main reason to watch the baseball was the betting actually. Actually, it's a legalization and also globalization is on the kind of bring that to the online. How can I say that? Make the betting more casual and online and globalized. Would be kind of the Web3 game currently. I think if we try to start from want to start from token centric things. Yeah, we should forget about we don't need to stick about the video game. Yeah, currently, yeah.
That's it? All right, we have 1 minute left. What game are you excited about within your portfolio or on Oasys that could be launching in the next year or 2 years?
Okay, so I have to say, FIFA Rivals, Mythical's rolling it out. Huge game. If you look at Electronic Arts had the mobile license for FIFA. And if you compare the Electronic Arts FIFA game to the Electronic Arts NFL game, which is called Madden, it was 20 times the size. Mythical already got 6 million people to play NFL Rivals. And that was a massive game in crypto, or a blockchain-backed game. So FIFA is very exciting. Also, FIFA themselves is interested in becoming a part of this. Learning, they're rolling out an esports league. I think there is a lot of opportunity for esports in crypto and Web3. And so, yeah, that's the one, Paris.
We'll do we'll take the 2 approach. One is embed, RMT things to the real fun game. The first game with Sega is about to launch. The title is it's called Battle of the Three Kingdoms. So we're trying to make the game as a game, and also the kind of RMT things that the economy is embedded to the games. Oh, that's one thing. It's coming in, and merge 35. I feel quite. Then second thing is token centric approach. So we're gonna now looking at the crypto space. Okay, now almost 100% is meme coin. It's joke coin. So that's the problem. So we should, we need more proper token project, token centric, entertainment things. So I can't mention the exact name, but we will start IP coin project, which is related to the game. And we're gonna announce it soon. Yeah.
In May, there's a game called Street City coming out. It will be a permission beta where you can either play it on Steam with a small fee or on Epic through an NFT. It will be a persistent world shooter. So think about a mixture of an RPG and a shooter. We think that there's a lot of opportunity in that space because most shooters are Twitch-based shooters, which favor young players that are like always on, and sort of like you get it to an older player and it's like, do I really want to go play Call of Duty and get absolutely mogged by teenagers? And then you kind of like start playing a lot more RPGs because like that experience becomes less attractive. We think that there's a lot of latent shooter lovers that would love to have both the RPG type gameplay and occasionally engage in higher Twitch, higher stress situations. The person or the team that's building that game, not just the CEO, but a lot of the people behind it, were behind 3 of the most significant hits that I think that are relevant to what they're building, which were EverQuest, the first major MMO popular in the West, PlanetSide, which was a very large scale shooter that did extremely well, and then H1Z1, which was the first battle royale. And so we have a team that has innovated in 3 genres, that has a very strong track record in shooters, and they're trying to build the combination of everything that they've learned in their 30-year career with a very abstracted crypto approach that people will be able to go on Steam and play, and the crypto will be a boost, but not a barrier. I love that style of game. I've been really waiting for another shooter to stick with. I've been with Warzone now for far too long, and I'm very excited about that one.
Awesome. Thank you guys so much. Great conversation. Really exciting. Thanks.
Thanks.
Thank you.